welcome. You've been kicking around the investment business for quite some time. When did you first get started?
I started getting involved with junior mining companies. My grandfather was putting money into junior mining companies in the 60s and 70s. So when I was 8, 9 years old, I was already watching stock prices in the newspaper and stuff with my grandfather's stock. So, and then I guess I went to Braylorn with my dad to first mining property when it was about 4.5. So I sort of just grew up in it, but I really, my first job in the real world, I guess, outside of prospecting was I started with Greenshield 1980.
Wow.
August. So it was 38 years ago.
Here in Vancouver?
In Vancouver, yeah.
And so at what point did you actually start to move into the junior mining industry, where you started to say this is a specialty of mine?
Yeah, well, I started my first mining company in 1984. We did produce gold. We did ship concentrate to Comincos.
What was it like back then versus now?
The biggest difference, I think, is that just the information that you get, that's free versus what it cost back then. And I think people look at it more like using the word investing, but back then it was totally gamblers. So there was no lotteries at that time, remember? So it was, you got that kind of crowd in it.
So what's changed? When we take a look at investors today versus then, what has changed?
I think there is a thing called investing now in junior resource companies. I think the quality of the companies is, of course, 1,000% better. The management is better. The rules and regulations are quite onerous now. Back then, there was really none.
Right. The regulatory environment has changed.
Right. Back then it was called the Superintendent of Brokers. Now it's the BC Securities Commission. So it was kind of the guy that was taking care of the stock market was monitoring real estate brokers and things like insurance brokers and stuff. So it wasn't like there was a specific business. So it's much more sophisticated for sure.
And how has technology played a role in changing the way that people are investing?
Well, first of all, look at the price of doing trades. When I started, it was 3.5% commission to buy. If you told somebody to pay 3.5% commission now, they would just go, "What is that?" So the fact that you can get in and out and not have to pick up a phone a broker who would have to fill out a form, take it to a trading desk, phone down to the floor, guy would write it down, run out to a trader, the trader would do the trade with another trader and all that paper. So that took about maybe 40 minutes to execute a trade, right?
Wow.
So I guess the speed of way things happen now, when in 1980, we had a Dow machine that just had this roll of paper spitting out everything that happened around the world. And I just remember when the Falkland War was on, could move the market. So everybody was standing around the Dow machine waiting to see what was going on if a ship got sunk. And it'd just be spitting us out with a little pinwheel thing. And that's 1983.
That was really the ticker tape, wasn't it?
That was the ticker tape. It just had everything. And if you wanted to find something from 2 hours ago, it'd be all hanging on the wall, this big long pieces of paper and stuff. So you can't really even compare it.
So there's the speed of transaction, the speed of information.
Yeah.
What about the quality of information that investors are getting now?
Well, I think when you look at reporting standards now, I think the expectations are much higher. I mean, 43-101 had a lot to do with that. For better or for worse, I think the good technical companies and the good technical geologists and management, they put out really good disclosure. But to give you an idea, it's like now you've got CDAR. If I want to see financial statements for a company, I can just go on CDAR for free. Back then, if my company was broke and somebody phoned, "Can I look at your financial statements?" you wouldn't give them to them. So, wow. So you basically could control that. And then if you had, 1 year you had $1 million in the bank, which would be rare. Junior mining companies with $1 million in the bank back then I think there might have been 4 or 5 on the whole exchange.
Wow.
That would have that.
So you've been doing this for a long time. you've been out there. You talked a little bit about what it was like when you went into sort of junior mining company, your first. How do you go about the process of determining what you're going to explore and the process that you go through now?
Well, I've got a saying, I'm always right, I just get the decades wrong. So timing is everything in anything in life. The commodity, you want to get the commodity right. I mean, if look at like with rare earths and look at like now with cobalt and lithium and stuff. A lot of those projects you could have got for staking costs. In other words, the ground was open, I could gone on the internet, entered it, and got it. Now it's stuff like that, these guys are paying top dollar for it. So, my philosophy is always, we want to be the guy that stakes it. We want to be early, but we don't want to be too early, because these things are not assets, they're depreciating, and they have to have work spent on them or else they come open. So really, I've spent most of the last 25 years looking at specialty metals because it's so crowded in the gold space and the copper space. So
do you have an analytical approach that you take as you sort of move forward? And if so, what does that look like?
Well, I think if we go back, me and a friend of mine, Dale Walser, we started getting into palladium back in the 90s. And to get information on palladium, like how much was actually used in a catalytic converter, most of the major nickel companies wouldn't even admit it existed.
What, palladium? They wouldn't admit?
Yeah, because what they're doing, they're buying nickel concentrate from companies, and the guys had no idea what the platinum and palladium content was. Is because in the 90s, there was only one Falconbridge and Inco and the Geological Survey of Canada were the only 3 labs in Canada that could assay for PGMs. And it wasn't until ACT Labs came out, probably in the mid-90s, that they started doing PGM assays. So nobody even knew you couldn't get it assayed, so how could you go find it?
So let me come back to the question about what is the approach that you take when you are now starting to develop a potential property?
Well, ownership, you want to own 100%. Okay, that's the first thing. You don't want NSRs. I mean, everybody's into their net smelter returns now and want them because there's somebody who'll pay you for them. You want to get the commodities right. You want to get something where you're not in a crowded space. Like, okay, in Vancouver, everybody's a copper porphyry geologist. So that is a real crowded space. A copper project in Chile, South America, Central America or something. There's 100 of them out there, same with gold projects, same thing, So we've been really looking at specialty metals. Cobalt is one thing that we're really focused on now, but the rare earths and different things like that. Part of it is to find the quality of the minerals that you're going to be able to extract it.
But key to you is that you own it.
We own it.
And then what's the process that you go through from there? Because you still have to be able to say, okay, I own this, and here's why I believe that this is a good investment. So how do you go through that process of being able to put together a perspective for potential investors?
Well, one of the things is that we look for what I call big company geology. So the geology has to be the type that's going to be able to host a big deposit. We're a small company. We don't want to find a small deposit. You want to go to people and say, look, this could be another Voisey's Bay. This could be another whatever. I mean, promoters love it's Carlin style or whatever.
So in essence, you're looking for a property that you may not have the ability to exploit, but that you then are going to be able to then move it to a major mining firm that's going to be able to take advantage of that find. I
think that when I hear promoters or management say they're going to put something in production, and really the food chain is prospector to a junior to a major. And if you think that you're just going to put something in production, I'm going to run a big mine, I think it's time to move on as an investor.
So that is your strategy. You're going to own it. You're going to identify it. You're going to identify that it is a major find, and then you're going to move it, in essence, up the development chain.
Part of it is that the strategy is that you have to. There is new research always coming out on geological interpretations. As much as people think mining is very low tech, it's very high tech, especially on the developing projects and how that's done. I mean, Canada is a world leader academically for geology, and there's always new academic research that's put out by governments, universities, and things like that that come up with the concepts, and then you sort of move on it from there.
Mm-hmm.
So there is a lot of science behind it.
Good.
And new science.
What's a project generator?
That's a word that gets used quite a bit, and the promoters like it because it's the idea that you're going to stake some properties and you're going to joint venture them, and somebody else is going to take the risk on it. That's easier said than done. Like getting a good project is pretty tough. To be able to say I've got 5, 6 good projects, that's even pushing it. I mean, there's some guys that are really good at it.
Mm-hmm.
You know.
But so how are you different than that? Because when you say that, there are some similarities in your approach. So what makes you different than somebody who's a project generator?
Well, I think the guys that are successful on it, and you could look at stuff like Altius and they've basically is a smart technical guys. I mean, the Archer Capital Group at Yukon's a good example. You know, the Discovery Group, they come up with projects, but they spend a lot of time looking, and they've got a pretty good technical team that basically just crunches reports and crunches the research. There's no simple way of doing it. It's how much you read, and be up to speed on anything new that comes out.
When do you make this decision, go, no go on a project? What are the elements that need to be in place for you to decide, yeah, I'm moving forward, or we're going to walk away from this?
Well, I'll give you where that go comes usually is when you get it. Like, for example, there's a Reliance Gold project that just came open. I've been had it on my calendar waiting for it to come open since 1985.
You've been waiting since 1985?
1985. So it came open Monday, and so that all of a sudden I know the project really well. I worked on it. It came open. That's my go time right there. So to say when that's coming, sometimes you don't know.
So patience is a major component in this.
Yeah, I think, well, patience for sure. I mean, patience probably counts for everything in any kind of business, really, to be successful. But I think when you're looking at generating projects, as we're talking about, there's usually people know what's out there, and we're all waiting. You know, when these claims came open, there probably was 100 people trying to stake it. It's all done on the internet now. So there's a lot of, I would say what I do here in Vancouver, there's easily 100-200 other people do it that I think that are at that level.
Well, that's not very many people.
No, it's not very many, but it is a lot when, you know, one guy's going to win. So,
right.
You know,
yeah.
So 1 in 200 is still 1 in 200. So,
right.
And everybody's got the idea of what, you know, where you are in the commodity cycle. You know, I always use the example here as, okay, as a property vendor that I do quite a bit, not just for my company, but with other companies, is when the cycle starts turning, the prospector or the guy that's got the property, he's probably broke because the market's been bad. He hasn't sold anything for a while. So when the cycle starts turning, the guys that act first, they will get the best projects at the cheapest price. And as the cycle goes up, by the second, third year in the cycle, you're selling moose pasture for 4 or 5 times more than you sold your best project 3 years before. So that's a big part of it, where you are on the cycle.
So when we take a look at the junior mining sector right now versus when you first got started, would you, just to quickly sort of encapsulate, would say that it is a less risky proposition, that there's greater work that goes into it, and that it's a tighter, more regulated community?
Oh, for sure. I mean, I think things like CEDAR, the internet, and, you know, research, you know, the stuff that's available on the internet now, you've got a fighting chance. I think back in the 60s and 70s, everything started changing when the Hemlo discovery happened, because people just started realizing that, yes, these things can be billion-dollar discoveries.
But key to all of that from an investor perspective now is I'm not gambling, I am actually investing.
Yeah, I think you can, in the junior mining space, be an investor now.
Thank you for sharing that. Okay.